USD is getting absolutely hammered, guys. Today we had PMI data, right? Purchasing Manager Index data. That's where they literally call hundreds and hundreds of businesses and just ask them a questionnaire, work out how business is going in an economy. And this most recent data for February in the US was just terrible. It was terrible. We'll start with the services index. So the services index was expected at 53, but it came in at 49.4, that's just a huge miss on expectations. Another key thing here is 50 in this particular index indicates that the economy is basically flat. It's not growing or shrinking. So when you go below 50, that means your economy contracted. So basically, a reading of 49.4 implies that the services sector in the US contracted. Manufacturing, how's manufacturing? Not great either. It was still above 50, it was 50.8, but it was still below expectations. The market was looking for something like 51.5. And the composite metric, that is where you combine services and manufacturing together, obviously was a disappointment because the other two were a disappointment. Markit PMI, these are the people that actually collect the data. They had a couple of extra comments that they were basically saying that businesses told them that businesses have basically been holding back on activity through worries about coronavirus. This is really, really important, guys, because basically one of the narratives that has been supporting USD in recent days is the fact that we thought that the US economy was going to be more sheltered from coronavirus concerns than other economies like the Eurozone or like the Japanese economies or the Australian economy or any of those economies. This data seems to be saying otherwise. Another thing that Markit PMI said was that this data implies that in Q1 of 2020, the US economy is going to grow at only 0.6% on a year-on-year rate, which is just shocking because in Q4 of 2019, the rate of growth was 2.1%. So how can you drop from 2.1% to 0.6%? It's just terrible. That would be even worse than in the Eurozone. We always go on about how weak the Eurozone economy is. They've been growing at 0.9% a year. 0.6% would just be absolutely shocking. But anyway, I'm talking about all this data. How did it affect the market? Obviously, USD has been selling off hard, guys. Really massive sell-off for the USD on this data. Obviously, we thought the US economy was so strong and it was like this beacon of hope. And this data is just really, really undermining that. So looking ahead, guys, what do we need? What kind of market themes do we need to pay attention to? Well, today we also had Eurozone PMI data, and that was much better. And when you compare the Eurozone PMI data with the US PMI data today, the Eurozone data is actually better than the US data. That is the first time that has happened since at least for about 3 years, probably since 2017. Eurozone data is better than the US data, which means that implies that growth in the Eurozone is going to be better. So what we could see, we've seen Euro getting hammered recently. We could see a reversal now back towards Euro out of the USD. So we're going to be all over this going forward, guys, watching every single data, all the news, bringing it all to you at Freak Network. That is pretty much it from me for now, and I will see you in the next one.